So welcome to the FAAST Funding webinar series. Yeah, my name's Eric Reed. I run our financial loan program that we call the New Horizon Loan Program. It has a few different components to it, and usually when we do webinars, we spend some time kind of talking about the history of it, what we've done with the program, money that's been lent out, just some more of the background information. But today we're going to get away from that so much, and we're going to get more into how the program works and how somebody can navigate through the program and try to bring some actual real world help and benefit to people who may want to apply for the loan, maybe want to find out what they would qualify for or what type of loan would be the best option for them. So with that being said, please let me know of any questions during the call that you might have. I will try to keep my eyes on the chat box the best that I can, and we will go from there. Hang on one second. For some reason my PowerPoint is not cooperating with me. There we go. Okay, so just a real brief background on what the New Horizon Loan Program is. It is the financial loan program of FAAST. It was a part of the Assistive Technology Act in 2004 when we originally received funding, and we also have just recently received additional funding this year to help sustain the program. So the program is open to all Floridians with disabilities to purchase any type of assistive technology. If you're familiar with assistive technology and the definition of that, it is a very vague and open definition. So basically, we look at AT as anything that is going to help somebody either gain or increase their independence. So we can be pretty flexible with what qualifies in that. And look forward to helping people in a lot of different ways. So the first question that a lot of people ask when they hear that it's a financial loan program and not a grant program is, why would I want to do that? When would be the best time to do that? And then of course, how do we go about it? But the when and the why are the first steps to figuring out what's the best option for you. So when would you want to do a financial loan? A couple reasons. A lot of times there is no other funding available for it. It's great when benefits, insurance, Medicaid, Medicare may cover things, other grant programs may cover things, but we all know that that is not the case all of the time. And often with what somebody does need for their independence, there's not another source out there other than out of their own pocket. So again, AT not covered by insurance or benefits, no other fundings available. A lot of times time could be an issue. There may be a program that might be able to help, but there's going to be a lot of red tape or there's going to be a lot of waiting to get to that point. And this is something that is needed today. The benefits will be too great to wait. So we're not going to wait for that program to come around, and we're just going to use out-of-pocket money to take care of this. In this case, a loan for your out-of-pocket money. Savings. There's a lot of opportunities with different organizations that do other financing. What we have found a lot of times is that those financing options are pretty expensive. There are certainly some introductory rates where you may be going in for hearing aids or something, and there may be a 12-month zero interest option to purchase those hearing aids. But at the end of that 12 months, if you haven't paid them off, then all of that interest that's been accruing hits you, plus a higher interest rate, sometimes up into the mid-20s. Our interest rates are all low, typically 5 to 7%, 8% at the most. Our standard rate is 5.5%. So a lot of times there's a big financial savings to use our program versus other finance programs out there. And then we have a lot of customers that come back to us time and time again because they're familiar with us, they know the program, We know them here at FAAST, and so it's a big family. So a lot of times customers would just prefer to use our program versus other options that they might have out there. The why of why you would do a loan kind of ties into a lot of the whens, but it's less expensive than other alternatives. Sometimes it's going to be easier or less cumbersome than some of the other services. There are not other funding alternatives, and it is something that you have determined you truly do need. There might be limited cash resources. You might be able to get funding through some other source, but they're not going to pay for all of it. So we can step in through our loan program for either down payments. We can just be the secondary source of financing. A common place where this works is with if VR is paying for vehicle modifications, they do not pay for the chassis. So we can come in and do a loan just for the chassis while they cover the vehicle modification needs. So who are our borrowers? We said we won't get into too many stats, but just for people paying attention and people listening, don't want people to think that they may not be able to qualify for a loan. We do everything that we can to welcome as many people into the program as we can. And so this is just a quick snapshot of who some of our borrowers are through probably the beginning of 2019 is when this was updated. Our average credit score is 649. Our average debt to income ratio is 35%. You'll see we do about a fifth of our customers have excellent credit over 700. And then about a quarter of our customers have below a 600 credit score. So we're very flexible in who our customers are and who we see every day coming through the door. So it always is appropriate to apply. It's always appropriate to see what we can do. At the end of this, we'll get to some financial education pieces of the program, which can always help somebody if they did not qualify for the loan. Another key part of who our borrowers are borrowers that are on fixed income. We do not have income requirements, so anybody who's on fixed income, just on SSI, just on SSDI, whatever the case may be, they are certainly a part of our program. You can see 28% of all of our borrowers are fixed income borrowers only. This is just some examples of what our program has funded. You'll see vehicle modifications, you'll see home modifications. We have a lot of hearing aids we finance through our program. Outdoor recreation, this is one of the track chairs. We've actually funded quite a few track chairs for folks that realize the importance of being outside and getting out and doing things they never thought they could do before. So we're wide open to, again, any type of assistive technology. Anything that will benefit somebody is a part of the program. So we're going to go through the different types of programs because we have really 3 programs that operate a little bit differently. They cover all the realms of assistive technology, but there are a few different nuances between them. So that's really the focus of the webinar today, is to make sure that when applying, somebody understands what the program is going to look like and where they may end up with the application process and how that process may take place. So the 3 types of programs are our direct loan program, and this includes consumer loans and telework loans, and I'll explain telework loans in just a minute. This is our internal FAAST loan program. We are an approved direct lender from the state, so in essence we act as our own bank. All of the money that we use for the direct loan program is our own. It's what's called a revolving loan fund. So everything we lend out, we expect to get back so we can continue to lend out. It is not an annual funding stream. As I mentioned earlier, we got funded in 2004, and then luckily we were able to obtain some more financing just this past year. and that keeps us going. It is not a guarantee we'll ever receive more money for this program. So the money that we have has to last. So it is a revolving loan fund. And that program, we can do really any type of assistive technology with that program. Our next type of loan program is our bank guarantee loan program. We've partnered with a great bank that's a regional bank here in the Panhandle called First Federal Bank of Florida. And they handle basically all of our vehicle modifications. That's the first place that we turn to for vehicle modifications. They issue the loans. FAAST actually partners as a guarantor with the borrower to help the bank guarantee those loans. So we don't use our money for those. The bank uses their money. It's just a normal bank loan. They just have FAAST's backing to help support some of the customers that we bring to them. And then the third type of loan program, which is new to us, is an interest rate buy-down program. And this is mainly to handle all of our home modifications. We partner with a group called SELF, which is actually the Solar Energy Loan Fund, but they have just over the last couple years gotten into, they used to mainly just do energy modifications, AC systems, solar systems. Lately, and about 2 years ago, they got involved in the disability community and working on home modifications in low interest and preferred interest loan programs. So we have partnered with them. They have the construction experience and they handle all of our home modification loans. So just to back up into Telework Loans, so if you hear that word, you'll know a little bit more about what that means. Telework Loans provide funding for AT that will be, one, used in the workplace, or will increase ability to gain or maintain employment. So that could be assistive technology that somebody is using at home, assistive technology that they need to take to work with them that is not provided by the employer. Whatever the case may be, if it is work related, it is telework. Excuse me. A lot of our hearing aid loans actually end up being telework loans because they are specifically seeking hearing aids for the primary reason to help them with their employment and continue to be employed. The other type of telework loan is where we provide funding for non-AT. And this is the only time where we can actually provide funding for something that is not considered assistive technology. And we do that in a couple different ways. It does have to be employment related. So it can be, an example would be somebody that has found a way to work from home. They no longer can commute to and from work, and they have an opportunity to work from home for a company, but they still will be working out of their home place. So they may need a new computer to help them do their job. They may need a new computer desk and printer to help them do their job. Whereas a printer, a computer desk, even a computer, depending on how it's used, are not assistive technology. In this case, we can help with the funding of that for somebody in the employment situation. The other thing we can do with telework loans and non-AT use is we can help somebody actually start their own business. We can help somebody with self-employment and entrepreneurship. We have done this in a few cases where we have been able to lend money out to somebody who has a business plan, has the mindset of what they're going to be able to do. We have helped start a frozen lemonade ice business. We are in the process of helping somebody modify some space for an assistive living facility. And then we've also helped somebody with a track wheelchair rental business. Now, all of those folks do have to have a disability. You still have to be an individual with a disability to apply for the telework loan, but you do not have to use the funding in a disability related situation. So to To move on to our direct loan program and to kind of walk through the process of the direct program, the application is a pretty simple application process. We have an online application, and we certainly also can email or mail a PDF application, and we certainly can also do a phone application if the situation requires that. Once the application is completed, it comes straight to myself. I do the underwriting, I pull the credit, we get all of that done here in the office, and then a loan committee that is made up of members of our FAAST Advisory Council and Board of Directors, they review every loan and they make a decision on whether or not it is approved or not. So typical time for a final decision once I receive an application can be as quick as 1 week if I have everything that I need from the borrower, or the borrower is very responsive, or excuse me, on the outset up to 3 weeks until we would get a decision. And that delay would be primarily just a matter of trying to work through maybe employment or income situations, trying to obtain enough documentation that I need on my end. But 3 weeks should be the very outset of when a decision would be made. Once we do get a decision, as long as we get an approval, then loan documents are created here at the office. They get sent to the borrower, and as soon as we get those signed and notarized documents back, then we do our funding. Again, I'm sorry, we do the funding here from the office. Typically, that process will include us funding the vendor directly. It's a very rare case and an exception to all of our rules that we would pay somebody directly and have them disperse the funds. So typically, we will handle all of that. We work with the vendors, the mobility dealers, the hearing aid, the audiologist, whoever it may be. We're working with them behind the scenes as we get an approval and waiting for loan documents back to help speed that process up. So a few program details, so somebody knows what they can apply for, and just kind of a snapshot of what we are looking for. Our maximum loan amount that the state allows us to do is $25,000. As I stated, we do not have any income requirements, but we do look at a debt to income ratio. So we don't have an income requirement, but your income has to support your debt. So we're going to look at the income, and then we're going to look at all of the actual debt. We don't take into account monthly expenses, food, cable bills, that type of thing, but we do take into consideration all housing expenses plus any actual debt that they have, whether it's credit card, whether it's installment loans, education loans, plus the new loan that we are applying for as well. So we look for that ratio to be a 50% ratio. And then our target credit score, minimum score, is about a 580 to a 600 is what we're looking for on a typical basis. Our current interest rate is 5.5%. That's been set for a couple years now. Of course, it is subject to change, but as of this point, we have no discussions in the works of changing that. So 5.5% should remain the interest rate for a while. Our terms, 6 months to 60 months, so we can go up to 5 years for a loan. We'll do secured and unsecured loans. If it's a tangible piece of assistive technology, we do require that is used as collateral for the loan. And this program does include Telework Loans, and there are some higher credit requirements for unsecured loans if we're going over $15,000 especially. But those are details that we would get into as I had the application and really dug into everything. So the bank guarantee loan program. So this is a two-step process where FAAST, since we are the guarantee on the loan, with the borrower. We want to make sure that it's a loan that we approve. So we go through our normal application process, just like if it were anything else. And once our loan committee approves it like they normally would, then I send a package to our partner bank, which does include a second application. Unfortunately, that's just the way our system has to work right now. So we do get a short application for the bank filled out. I send our contact all the information that they need, and they start their underwriting and approval process. We try to keep our approval process very similar to theirs with what they're going to look for, but there are times where they may take exception to something that we have approved. So it's not a guaranteed thing in that second application step. So once we send it to them, their process is usually pretty quick as long as they have everything they need. Usually they're working directly with a mobility dealer at this point, so it's just a typical auto loan for them. Typical time from initial application is 2 to 4 weeks for a final decision. See, there's an extra added week just because it does have to get to the bank after it goes through our process. So the bank funds to the mobility dealer directly. They would not fund to the consumer. It would always go to the AT provider, and then you're invoiced monthly from the bank, and they do have the ability to make ACH payments. I did skip that part with the direct loan program. We also bill every month from FAAST for all of our customers. Right now, we do not have an online payment option, but that is coming hopefully by the beginning of 2020 through our loan software provider. So the bank guarantee program is a little bit different with the requirements and what we can do with the program. The maximum standard loan amount is $25,000. And there are some options to go up to $40,000. If you're familiar with modified vehicles, that can be very helpful. But there are some higher credit criteria that are required for that. Again, there's no income requirements. It's a debt to income that's looked at. The target minimum credit scores for the bank loans are a little bit higher. We look for about a 610, just to have the bank comfortable with a lower score. And our target maximum debt to income goes down a little bit as well, to about 45% is a little bit more in their comfort zone. Our current interest rate with them is 5%. That is for any type of vehicle, whether it's new or used. And we can go up to 84 months. So we can go out to 7 years on the bank guarantee loans. So that certainly helps with some of these higher dollar purchases. Our average loan amount is probably right at $25,000 for this. So all of the loans that we send to them will be secured loans, and primarily they are all modified vehicles. We have only sent one non-modified vehicle loan to them, but it was a high dollar amount, so they did take it, and it was secured. We can also do telework loans for this, which we have seen a lot of modified vehicles to help people either get back to work or be able to get successfully to their job on time every day. So that is our bank guarantee loan program. Again, typically that is for a modified vehicle, that is where that loan would be through our bank guarantee. And just one other thing that's not on here that's important to know is that the typical guidelines for the vehicles are we will not accept a loan on a vehicle that is over 10 years old or that has more than 100,000 miles on it. So those are the guidelines. Of course, there's always exceptions. So just like everything else, apply, and we will always discuss and see what we could do. And our third program is our interest buy down program. And so the purpose of this program, kind of touched on, is for our home modification program and our home modification loans. But how it works is that We actually send Self a little bit of money for each loan in order for them to reduce the interest rates for the borrowers, to help get the interest rates closer to where we would typically be through our program. It's not a guarantee that it'll be down to 5.5%, but it brings it lower than what their standard interest rates would be. And again, their interest rates are great to begin with, but this does give an opportunity to help our customers get a rate that's a little bit closer to where the FAAST program tries to be. There's only one application. It's just the Self application that would get filled out. There's an online application they have, or they also have a paper application. If somebody does fill out, and we're, just so you guys know, this is a new program. We don't have everything up and running on our website yet. So if somebody does fill out our application first, unfortunately, we would have to direct them to Self to fill that out. We are working on getting those direct links on our application process, so that does not happen. But right now, we're not able to share that information, and our applications don't match up directly. So the decision process, it is just Self's approval process. Their typical time, again, 1 to 3 weeks to be safe. They try to get through as quickly as they can. They do a lot of different home modifications and home construction, so they're busy people, but they do a great job with their specialty, which is home modifications. Self would fund the loan. They pay straight to the contractor. Then the invoicing to the customer would be monthly from Self, and they do have online payment capability as well. So a little bit of background before we get into this of why we're doing this with Self. A couple reasons, but the primary reason is that home modifications can be pretty tricky. Most consumers that need a home modification to help them with their independence know that they need a couple doorways widened, maybe. They may need their tub converted to a shower, but they certainly can't draw up plans for it. They don't know the rules and regulations of the construction industry. They don't know the codes that need to be followed, and neither do I. Either does anybody here at FAAST. So in doing home modifications over the last few years, we've realized that those issues come up frequently in construction projects, and we are not the experts to help guide the consumer through that the best that we can. Self is, and they have the contractors. They have a network of contractors. Anybody that does work with them has to be registered with them, so they do their due diligence to make sure the contractor is in good standing with the state. And they do some other things to monitor the construction process as it's happening, to make sure everything's going well for the consumer. That's the first thing, is to make sure that the job gets done properly and there aren't any surprises at the end, that payment gets delivered fairly to the contractor, but also not all up front, and somebody's left without a job being done. So they're a great partner for us to be able to continue to offer home modification loans in a more positive and accessible way than we were before. So a maximum loan amount through Self is also $25,000. Again, there's not income requirements that they need. They do a lot of work with fixed income individuals through their other programs as well. So our Individuals with Disabilities program fits right into what they already do. They do look at a debt to income a little bit differently than we do. They'll look at an overall expense to income ratio. So they will take in some more of the daily expenses, as well as a standard debt to income, to see a different approach on how they look at it. They don't really look at credit scores. So they're not going to look at credit score requirements so much as we would, but they do add the overall expense to income ratio. For some of the larger construction jobs, they can go out to 10 years. All of their loans are unsecured loans. They do not secure anything. And so the home modifications that are part of our program with FAAST are only for increasing accessibility and independence for individuals with disabilities. There are certainly people with disabilities that need other types of home modification loans. Only our program comes into play if it is to increase accessibility and independence for somebody. And because of the way we were funded to start this program, it does not include telework loans. It's only for consumer use loans. So financial education is the last thing that we'll really talk about. And it's offered to all borrowers. We do financial education here at FAAST. Self offers a few different types of financial education classes to their borrowers as well. Credit building, education. It's important for everybody. If somebody is not involved in some sort of financial education or hasn't read through budgeting, that type of thing, I encourage any borrower to do that. It's especially important for customers that may be declined a loan from us. It's a good step that we take. We try to talk to them about ways to improve credit scores, ways to increase debt to income or decrease debt to income ratios, so that we may be able to relook at that loan and get them back on the path. We do have a new small program for credit building for folks that were declined for a FAAST loan. Some people may qualify for that, and we can actually help them build credit while we wait to do an assistive technology loan down the line for them. SELF actually includes some requirements on financial education into some of their approvals. If somebody was really borderline, they may actually require a time frame where they complete some online courses. So here are just some of the resources that are available to you. So when I get this sent out to you guys, this will be included there, or if you have a chance to just snap a picture of it or something right now. Here are the websites for us, for FAAST. Here's the online application link that'll take you straight to the FAAST application online. Here is SELF's website, and then there is the link to their online application as well. Here's a good credit education site, mymoney.gov. They really go into a lot of different things on that website, and it's a great resource for somebody looking to get into some financial education, credit education. There's some exercises on there. You can kind of test your financial well-being. They'll kind of score you and let you know what you may want to work on. So it's a good resource to look into. Credit Karma is another good resource. They can provide a lot of credit building information. They can monitor your credit reports for you, and it is a free service at their basic service. And then free credit report, annualcreditreport.com is the official site for the government to obtain one copy of your credit report each year for free through the three major credit reporting agencies. So that is a great resource, and that is a no strings attached free credit report that you are able to receive. There is my information. eread@fastinc.org is my email. Certainly here at any time for any questions that anybody has. And with that being said, I would love to open it up for any questions, any comments, and whatever else you guys might need from us. Does anybody have any questions? You can type them in there, or you could just speak. I don't think I have anybody on mute, so anybody is free to talk at any time, or well, if there aren't any questions, then that would conclude our webinar today.
Hey, Eric, I have a question.
Okay.
What about like smaller like personal loans? What are your opinions on those? Like, and people trying to get those maybe to like help themselves in credit crunches and everything like that.
So yeah, I mean, it's credit's a funny thing. People on one hand say you shouldn't take loans, you shouldn't do this, but you need them to build credit, and credit drives a lot of things these days. So anything from car insurance to trying to rent an apartment, people need credit, and people look at that. Even jobs, employers pull credit now. So having a positive credit history is important. So yeah, small personal loans can be a great tool. I think the thing people just always have to watch out for is how much it's going to cost them. You know, there's easy ways for secured credit cards if somebody's just building credit that won't really cost much of anything, as long as they're managed properly and balances are paid off every month. There's personal loans with, you know, payday lenders and those types of things that no matter what you do, you're still going to end up paying more than you should. So personal loans to help build credit are great. It's a matter of making the smart decisions in what type of loan you're going to use.
Okay, thank you very much. Appreciate that.
Yeah. Any other questions? Anything else from anybody? Well, I appreciate you guys all being on this webinar today. Again, if anybody else needs anything from me, please let me know. Email, call, whatever you need to do. I will go in and send this PowerPoint to anybody that may want it. Just let me know, and we will get that sent out. And look forward to hearing from you guys. And again, FAAST is always here to help. So anything else we can do for you, let us know. We look forward to having you on our next webinar series. Have a great day.